Hey, welcome everyone. This is Rick Alberty. I'm the Executive Director of ChamberSOUTH, and today we're here for another edition of ChamberSOUTH Spotlight Podcast. And today I have the honor of speaking with Kenneth Wright, the Insurance Savant. How are you, Kenneth?
The Health Insurance Savant.
Oh, look at this.
But I have to say that I do life insurance as well. So I don't just do health insurance. I do a bunch of stuff. But that was the brand I came up with a few years ago, the Health Insurance Savant.
The Health Insurance Savant. So, well, in today's world, I could see you doing all kinds of different insurances because of the need that there is there. But before we get into that, who is Kenneth Wright?
Who is Kenneth Wright? I am the father of 10-year-old twin girls, Catherine and Constance. I'm an elder dad, meaning these are my first and only children. So to me, that is the primary thing that I am today, is the father of two incredible young girls.
That's awesome.
That is primary. I've been in this space in Miami for about 10 years now. I came to Miami with an organization called Teach for America. I had a company in New York and I sold it and made some money and did the employment contract. And then when I wanted to kind of do something different, maybe good for the world, Teach for America takes non-teachers, gives them a summer of training, and then sends them into a at-risk or at-opportunity classroom. So I was sent to Miami to teach. Didn't think I'd be here. Thought I'd be out west. They had a lot of need in Vegas and in the mountains, so I thought I'd be out there. So rather than the desert and the mountains, I got the swamp. But I'm here in Miami now, and building my business and enjoying it.
That's awesome. How many years have you been in Miami now?
Came down in 13. Teach for America is a 2-year gig, so I spent 2 years in the classroom in Homestead, and in 15. I left that because that was when my children were born. So I spent a couple of years just kind of helping out with them for a while before I jumped back into the workforce.
So Teach America, I would think that would be something that was trying to help the underprivileged children. So that's a big step, and that's something nice to give back. That always feels fantastic to give back to an organization or to a community. Now, tell me, why health insurance?
Yeah, and it kind of all runs together. I know maybe it doesn't sound like it would, but last year I was very fortunate to have had a chance to take a AI class with an organization called BizHack. Little plug for BizHack. If you don't know who they are, check them out. An incredible organization. And during that, one of the things that we were asked to do is come up with the story of me. And you just asked me, who is Kenneth Wright? So the story of me. And so basically it's the question of your why, right?
Exactly.
And I've never been really big on the whole question of why. I've always thought I just did things because it made sense to me. And I've done a lot of things in my life. I've done everything from been on Madison Avenue, where I helped develop Coffee Mate Liquid and Coffee Mate Light, and AccuView disposable contact lenses. So that was my first career out of business school. So I was in business school at the University of Texas. After that, I took a little sabbatical and came back and got a master's in religion, and then went on and founded a company, On-Site Wellness. And so I've done a ton of stuff. And so when I was trying to figure out my why, I was really struggling with why health insurance now? How does that fit into everything? And what I realized is the foundation of what I do has always been based on the concept that everyone counts and everyone should be treated with dignity. And I believe that health insurance and life insurance are fundamental rights. They're ways to protect your assets and protect yourself. And it all fits in with my philosophy and everything I looked at in my life. I realized that the reason I chose to do anything or stop doing something, the reason I left advertising, the reason I joined Teach for America, the reason I'm now in health insurance again, is because it's all founded in the concept that people count and people are important. And this is all based in, I was raised in a Catholic household with a strong belief in social justice. And I believe that, people, the poor, everyone needs and deserves to be taken care of.
Absolutely.
And doing what I do allows me to do that. I know there's a lot of talk about the costs of health insurance in the United States. And a lot of that talk is true. It can be difficult for people to navigate the system. But I make an effort to make sure that everyone gets what they need, regardless of their income, and make sure that they can get what they want and what they need for their needs. So that's it.
Kenneth, such a strong message to the young folks out there that you never know where life is going to take you. Where you start in life, in a career, doesn't mean you're going to end up in the same place.
I tell people that all the time.
Very few.
Yeah.
Very few ever make it that you start in one location and finish in that same location. When I was 18 years old, I started working at United Parcel Service at UPS. I never thought I'd be there for 20 years, and that would be such a big, integral part of my life. You've done things like I've done many things in life, and now as we get older, we realize, wow, what we have been able to accomplish and what we've been able to learn in life, it doesn't matter what you do, as long as you can do it with people. Either learn how to manage people or learn how to work with people or learn how to educate people. And, that's just, I think that is the basis of success anywhere. But let's talk about insurance. You and I both know, and I would think, because I know for me, I would hate to every year have to go through my insurance and pick out what's right, what's wrong. Got to have insurance supposedly by law, or I don't have to have it by law. It gets complicated out there. Tell us a little bit about your interaction with folks when you tell them health insurance.
I mean, it's all about what makes sense for the consumer. Any insurance, and especially health insurance, is about risk management. And that's the bottom line, which is how comfortable are you with managing your own health risk? And that really depends. That will depend upon how much you want to pay each month. That will help determine what kind of medical network makes sense to you. If you just think that, well, you know what, I'll go to any doctor at all, that will determine one kind of plan that makes sense for you. And those plans, if you're willing to go to any doctor, those plans can oftentimes be a lot less than I want to go to a specific doctor. If you're like, I don't go to the doctor very often, that's one type of plan versus, I really need to see the doctor quite a bit and I have chronic issues I'm dealing with. So those are the kinds of conversations that I oftentimes have. I mean, those are the conversations I always have with people, is helping figure out what is going to best fit their need. Sadly, there's a lot of people that no matter what health insurance costs, they feel that it's too much. They'll say things like, well, I don't use my health coverage. Why do I have to pay so much? And well, the idea is that anybody could pay to go see a doctor out of their pocket. You don't need to pay $300 a month or, $3,600 a year to go see a doctor. You could just go see your doctor. The reason you have health insurance is in case something major happens that you don't go bankrupt. And that's the bottom line. And that's what I tell people. Is that this is about keeping you from going bankrupt. This isn't about the $500 costs. This is about the $50,000 costs. And those costs are real. If you end up in the hospital, if you end up in the emergency room, if you end up with some type of chronic condition or some type of major accident, it's going to cost you a lot of money. And bankruptcy, the number one cause of bankruptcy in the United States is medical care costs.
No way.
Yeah. And it's not even close. It's not even close. So
I didn't know that.
Yeah. I mean, for individual bankruptcy, right? Yeah.
Wow. So medical costs, they hold you accountable all the way through, huh?
They do.
See, I had no idea of that because I know that there's no way that everybody in the United States has health insurance.
No.
There's no way. So they go to hospitals that don't really require health insurance. But let me ask you a question. You may know the answer. Is it mandatory for a hospital to give you care whether you have insurance or not?
Yes, certain, especially there's, well, and it's a little more complicated. The answer to that is yes, right?
Okay.
If it's an emergency, they have to provide you care whether you have insurance or not. If you go to a not-for-profit hospital, then there's a chance, depending upon your income, that you may not be charged at all for that treatment. But on the other hand, there's a lot of times when you still will end up with a bill depending upon, like I said, your income. So not-for-profit hospitals have to provide a certain amount of charity care every year in order to maintain their nonprofit and tax status. For-profit hospitals don't have that same
Don't
condition.
have that stipulation.
Right.
That's interesting too. That's interesting too. So in the medical end of it, let me ask another question. How about the elderly, the ones that are already 65 and above, have Medicare?
Incredible.
Or
Medicare is an incredible plan.
Okay.
Incredible. You know, you can't.
Do they need additional insurance?
You're going to get my philosophy in this. A supplement, yes, you should get it. They should get a supplement which will offset some of the major out-of-pocket potential costs,
Like a gap insurance type thing?
kind of like a gap insurance. Just reduce it. Just what it does is that it keeps you from having major costs. So it's kind of like a gap. It is.
Okay.
That's different than the Advantage plans. The Advantage plans, again, it's about your risk and what you want to be responsible for, what you want to get out of your plan. The Advantage plans provide a lot of benefits to some people. You've seen their ads everywhere, but most people don't need the Advantage plan.
Advantage is a step up in Medicare?
Yeah, it is a supplement.
A supplement?
It's another supplement.
So it's like a third tier or...
Right. You get gym memberships and you might get some groceries or I don't know. There's a bunch of other stuff that's involved in it. But for the average person, listen, you can spend money on whatever you want to, but standard Medicare is an incredible plan, and you can buy a really reasonable supplement for just a couple $100 a year. You know,
Wow.
Well, I mean, a couple $100. I mean, it's not going to be cheap, but I mean, it's not tens of thousands of dollars. Yeah.
There were some changes. We're now in 2026, January, February. January's already gone. We're in the middle of February. There were some changes to the insurance late last year. Am I correct?
And a lot of people have been confused about that.
Please explain.
I completely understand why. There was a lot of talk that the subsidies were going away. Right now, if you purchase healthcare in the marketplace, the healthcare.gov, the Affordable Care Act plans, Obamacare, whatever you want to call it, if you're buying an individual policy in the marketplace, you, based on your income, people get a subsidy based on their income and the number of people in their family and the number of people being covered. All those things you could end up earning a subsidy. Those subsidy levels were set at 400% and less the federal poverty level. So if you made 400% or less than the federal poverty level, you could receive a subsidy if you so chose. During COVID, those rules all changed. So that stayed, but then there was a rule put in that allowed you to get a subsidy, and that was based on the total amount of money you would end up spending on a plan with respect to your income. So when that happened, it wasn't just 400% of the poverty level. If you spent more than 7% on your health plan and you made 800% of the federal poverty level, you would get a subsidy for a percentage of that plan.
Really?
Yeah. So a lot of people that were making good money, $150,000, $200,000 a year, were getting subsidies.
That's what's now gone.
That's what went away. So, and again, you run into the same issue now. Somebody that was paying $500 a month now is paying $1,500 a month.
Wow.
Question is, can they afford it? Do they want to afford it? What makes sense for them? And the good news is that there are plans out there that are not based on income. They're based on you being able to be underwritten. So
Health issues.
yeah. So if you have major health problems, the coverage provided by Obamacare or the marketplace is incredible because there's no limit, there's no nothing. No matter what's wrong with you, you can get it. There's no. So
that's a safety net
it's
right
perfect. It's perfect. But if you are quote unquote healthy, and I don't mean that you aren't on blood pressure meds or aren't on anxiety meds, everybody's on or cholesterol meds.
Exactly.
If those aren't considered conditions anymore. But if you don't have cancer or heart disease or some type of major neurological problem, there's a chance that there's a plan out there that you could qualify for. That would be, well, I'll give a good example. I had one family paying $3,000 a month. They're now paying $1,800 a month.
Wow.
I had an individual paying $1,000 that's now paying $500. So there are plans out there, if you can qualify for them, that provide incredible coverage, as good as you would get in the marketplace, at a much lower rate. So people need to. What I always tell people is just talk to somebody. A lot of times you'll hear what I'll tell people is, you got a great deal. Somebody called me the other day and I'm paying $500 a month for my coverage. I said,
keep it.
For what you got, it's incredible. Well, I said, no, you can't, you're not going to find anything better. That's you're lucky that again, and that might sound like a lot to somebody, especially if they know someone who's paying $50 a month.
Yeah, but come on.
And that person paying $50 a month is either making a lot less money than them, or they aren't reporting what they're making.
What they're really making.
Yeah. And the problem with that, I have a lot of people that underreport their income. What can happen is that when they file their taxes, the government can come back and charge them for all those premiums that the government paid for. So they were paying $100 a month or $50 a month. Well, come April, they then have a $15,000 charge from the government. And a lot of people, again, there's people that it happens to every year.
Well, it's just like people that when they file their taxes, unfortunately, they make a lot more when they're in business on their own, but they report a lot less. And that just creates problems down the road anyhow. I can't get credit. They won't give me a loan. There's a lot of problems. So always good advice is do the things right, because if you do the things right, it'll all fall in place.
Yeah.
It'll all fall in place. So let me ask you a question. There's a lot of people out there now that I hear, thank God I've never had one, but 40s and 50s, and they're having a heart attack. If you have a heart attack, very difficult to get health insurance. Am I correct?
No.
Anymore?
The best thing about the Affordable Care Act was that regardless of any pre-existing condition, you have to be able to purchase a health plan.
That's in the Affordable Health Care Act.
That's the marketplace.
But not out of the marketplace.
But again, there's no reason to go outside the marketplace.
Outside the marketplace,
yeah, it doesn't
right?
make any sense. I mean, that's because, like I was just saying, is that if you can be underwritten, you can get a lower rate.
Okay.
But if you've had a heart attack or you've had some type of major health issue, that's what the Affordable Care Act was developed for, was to make sure that people, regardless of their health condition, didn't matter if they had stage 4 cancer,
Sure.
didn't matter what was that they would be provided a place to get health insurance. So that's the beauty to the Affordable Care Act.
Thank God for that.
Yeah.
Thank God for that. Let me ask you another question. Life insurance. I tell the young folks, don't think of life insurance as an insurance that's just something that you're taking out, even though you're young, that you may pass 20 years, 10 years, 5 years, because you never know what's going to happen and when you can pass. But I tell them, think of it as one of the stools of the leg, one of the legs of your stool for wealth down the road. Do you agree with that? Or don't agree with that?
there's two different ways that I approach life insurance for somebody. Number one is, well, it's a couple reasons, right? Number one is you can use it. One thing I just learned, and I feel kind of bad for having just learned it. I didn't realize that if a person is asked to take out a life insurance policy when they get their home loan, I thought that policy would then pay for the house if something happened to them. It doesn't. It just pays off the bank loan. It pays off the bank. So the person, if they aren't making their payments because they've lost income, the house will still go into foreclosure. And they won't get it. So number one, if you're buying a house, get a policy that covers your house. So that would be one thing. Number two, what you were talking about is a policy like a universal life policy that does build value. Those are incredible to get because they do build value. There's something called the $1 Million Baby Plan, where when you first have your baby, you put in $50 or $100 a month. That's all you put away. And by the time they're 60 years old, it'll be more than $1 million or something. But the thing about those policies is that it provides you an opportunity to borrow against the value of that policy, the cash value of that policy. But
you still got to pay it back, right? If you borrow against it?
If you don't pay it back and you die,
it comes off
the death benefit. So, it depends upon what you want to use it for.
Okay.
Because it's tax-free, right? There's no taxes on it. So it's a great way to
have a loan tax-free.
Yeah. But the other thing I'm advocating for most people is that long-term care issues, right? A lot of people end up at some point in their life needing some type of care. All right, and that's just the facts.
So
if you live long enough, there's a good chance you're going to need some kind of care. And sadly, if something happens to you, you might need it sooner. All right. Buying a long-term type care policy can be really expensive. So the one thing that I urge everyone to look at is getting a policy that has what's called living benefits. And that means that you could often use from 50 to 75% of the death benefit for a living benefit of some sort. So you might have $1 million policy and you get diagnosed with cancer. Right away, they cut you a check for $500,000. All right. Or you get a heart attack and you're incapacitated. You can use that money to care for yourself in whatever situation you'd be cared for in. And again, each policy is different.
Right.
Each policy provides a different amount. So I'm not saying that they're all 50% or
75.
But the idea is it's a really much cheaper way to go about guaranteeing that if something does happen, that you'll have the financial wherewithal to be cared for.
It sounds to me like,
and a lot of people aren't aware. A lot of people
have no idea about that.
And it's not, and it's a much less expensive way to go than to try and get a long-term care policy.
So, Kenneth, to me, you're not just an insurance guy. You are like a financial advisor because you're looking at their entire picture of health and wealth and trying to put it all together to see what fits. Because you and I spoke not too long ago, and you told me, maybe we can get them a coverage that costs less and you have a higher deductible, but then you can buy a gap insurance to cover that high deductible.
Again, I do that I recommend that all the time. A premium payment, I consider that sunk cost, right? If you're paying $1,000 a month, you can oftentimes lower your, and let's say you have a $7,000 deductible, right? Well, you know what? You can get, and somebody says that's too high, that deductible. Well, I don't want a deductible. I want a $5,000 deductible. Well, then you're going to pay $1,400 a month for it. So the question is that extra $4,800 that you're spending is sunk money, right? And
you don't get it back.
You're not going to get it back. And if something happens to you, you still got to pay that part of that deductible. But if nothing happens to you, that's money that's gone.
Thrown away.
So what I always recommend is people purchase the highest deductible plan and then find a way to fill in that gap. And there are a lot of plans out there that will cover you for accidents, which is usually the most common thing. Some will cover you for different medical issues that you could run into. Some will cover for hospitalization. And again, I recommend accident, hospitalization, critical illness add-on, and it is surprisingly affordable and much less than trying to reduce your deductible by increasing your premium or having a different plan.
Like you said earlier, talk to somebody.
Yeah.
You know?
Talk to somebody. And again, I would love to have you talk to me, right?
Absolutely.
I mean, but talk to somebody.
Talk to somebody. That's so important because everybody thinks that they know what's happening, and you really don't know until you talk with someone that's got the knowledge of what's really happening in that field, in that profession.
And the worst case is that you're going to find out that you're paying what you have to pay. That's the worst thing that could happen. You're going to find out that there's nothing better and that you have to pay what you have to pay. That's the worst thing.
That's great.
Best thing that could happen is maybe there's something else out there that works better. That works better for you.
And that works better for you, and you can save some money and work, and it helps you and the family.
Yeah.
Is there anything else that you want to tell our listeners today about the Savant and about healthcare or about life insurance?
Well, no. I think I just want people to understand what health insurance really is, and that's what I want to try and convey. Is it's health insurance in the United States is not health care. You're not buying a health care plan. You're buying insurance. And what I mean by that is think about car insurance. When you buy a car insurance, it doesn't pay for your tune-ups. It doesn't pay for tires. It doesn't pay for windshield wiper fluid. It pays for major things that happen to your car.
Absolutely.
So what I would recommend is if you do have a health insurance is that you do those maintenance things. Number one is that the other great thing about the Affordable Care Act is that it guarantees anybody out there that buys what's considered a major medical or ERISA qualified plan that they have to be provided no cost, no copay, no coinsurance preventive health. So go get your physical exam. Go get your colonoscopy, get your mammograms, get all that stuff done. There is no cost of any kind associated with that.
That's excellent. I didn't know that.
Yeah. So that's that. So definitely go and take care of yourself. And the second thing is just really realize that the reason you have that health insurance is so that, $7,000 isn't a drop in the bucket. So, the deductible right now, I think for the ACA plans is even $8,100 now. $8,100 isn't a drop in the bucket, but it's a lot less than $25,000, $35,000, $40,000 or $50,000. And that's what you have to keep your eye on that. Keep your eye on the idea that it might feel like a lot, and it is a lot, but it's a lot less than it could be. So,
and that medical bill goes up quickly.
It does.
Well, Ken, thank you very, very much for being with us here today.
Well, Rick,
ChamberSOUTH Spotlight.
Yeah,
appreciate it.
And I want to make a little plug for ChamberSOUTH.
Thank you.
I've been on the board of directors of the South Dade Chamber. I was on the board of governors, the Miami Beach Chamber. I'm an active member of the Miami-Dade Chamber. But if you're looking or have any interest in looking at the opportunities that are available in chamber memberships, I highly recommend that you consider ChamberSOUTH. Rick has built an incredible organization It is one of the most approachable, easily to be integrated chambers that I've been lucky enough to been associated with. So I want to thank Rick
you,
for for the good work that he does and for the welcoming I've always felt at any event that ChamberSOUTH.
Kenneth, thank you so much for that. I really, those kind words, I appreciate that. It means a lot to me. And that's what we've been trying to build. We're trying to build an organization where everyone is welcome. And I really try my best to help people improve and get more business. And that's our goal. So thank you very much. On 3, we're going to say goodbye to those cameras right there. 1, 2, 3. See you guys later.